Hi there, welcome to the second part of the video. In this video, I'll be showing you on how to answer part C and D. Part C states that you are required to state the effect on profit, two parts, and a balance sheet if the advertising expense, the prepaid advertising was not adjusted at the end of the financial period. So let's focus down to the prepaid advertising expense, and here it is. In the second row, whereby there's an amount of $800 on 30th of April 2016. So the question is asking that if you do not recognize this $800, that means if you do not have this entry down here, what happens to the profit and the balance sheet? Now here, in this line, we actually minus $800 from the advertising expense account. If we did not minus away this $800, we would actually have more expenses. Now note that with more expenses, we will actually have an opposite effect on your profit. We have lesser profit. And then, this prepaid advertising expense is an asset. If we do not recognize this asset, we'll actually have lesser asset. So we actually understate assets. So to answer the question, profit will be understated. We don't use decrease because this is just a supposed kind of question, a theoretical question. So profit will be understated by $800. You have to state understated or overstated, and by how much. And in the balance sheet, we have our assets, and more specifically our current asset will be understated by $800 as well. Because assuming we do not recognize this adjustment, we do not have the prepaid advertising expense, therefore we have lesser assets. In part D, you have to state and explain the accounting concept applied to the adjustments made to the advertising expense account and rent income account. It's a 2-mark question, so you must always state the concept. Here we call the matching concept. So you would have earned 1 mark just by stating this concept, and explaining it states that a business, you will have to record income and expenses only meant for the same financial year. Alright, so any income and expenses meant for the next financial year or meant for the previous financial year should not be recorded. So this is why we remove those expenses or income that is not relevant for the current year's financial year. And then here we will actually explain also that this is to ensure that profit for the year is calculated accurately. Otherwise, you will have situation like profit will be understated and current assets will be understated as well. So there you go for this question.